Hey everyone, hello and welcome to TradesByAdvait weekend market analysis video. Today, I want to summarize a lot of important actions that have happened in the financial markets and what is my view going forward, backed with a lot of analysis. So let's jump right into it. So right now, the $1,000,000 question is, since the election is over and now we have a definitive result of Trump winning, now we also know that Fed has, did the rate cut of 25 basis points. What is the future of the financial markets and what is the analysis that will lead us to know like what is going to be the trajectory of stock markets? So let us jump right into the analysis and start with the macroeconomic headwinds for us to actually get a lot of good data points and which will help us point us into a right direction. So starting with the macroeconomic section. So when it comes to macroeconomy, there is a lot of things that investors and traders like you and me should be really aware of. So starting with the Federal Reserve. Now remember, this year we got two interest rate cuts, and that is 50 basis points to start and then 25 basis points again. So now cumulatively we have 75 basis points in total of rate cuts this year as of now. And remember, in December we have one more FOMC meeting left. So right now the trajectory of rate cuts is divided between 50% and half and half probability as opposed to a major Fed rate cut coming. So right now we can assume that at the max they will cut more 25 basis points in December if the data permits to do so. But as of now, right now the terminal rate is sitting around 425 to 450 basis points. So what happened? The really interesting part about Fed rate cuts is the day when Fed did the rate cut of 50 basis points and thereafter they cut by 25 basis points. The shocking thing is 10-year yield is actually rising. So it went from almost 3.8 to 4.4. Now in the bond market, this is a massive move. Now, why am I concerned and why am I seeing this as a bad sign is because imagine this. If government treasury like 10-year bond is paying you 4.4%, that is a very lucrative opportunity. And that means that investors will prefer a flight to safety with a very reasonable return as opposed to taking risk in the equity markets. So that is the rationale why people are concerned about this recent rise in the 10-year yield. So coming on to the markets right now, it's near all-time highs. And the good news is Trump wins the election. Now, the winning of the elections by Trump is coming with a lot of, factors that we need to know. First is since Trump is a pro-business leader, assume that a lot of tax cuts are coming. Secondly, he has, fought his, election campaign on the basis of fewer regulations. So fewer regulations is really good for the business because now they don't have to worry about the overhead of the legal work and permissions and all those things. So it is a good sign for capital markets. And that is why you saw a lot of huge spikes after the winning of, elections by Trump. He is also like a inflationary in terms of his policies regarding immigration. So he is more of a America first, manufacturing America, make in America kind of guy. So what will happen is this is going to add fuel to the inflation fire, because if you have to manufacture your goods and services in USA, then you have to pay higher labor cost, which in turn increases the price of the products and services. So that will add, so basically those policies are inflationary in nature. Now, talking about, government spending, this has been a very huge hot topic nowadays regarding DOGE, that is Department of Government Efficiency, which is being led by Elon Musk and Vivek Ramaswamy. Now, all in all, it is very good for USA to control the spending on federal level, but that also means that, the debt on the federal government is going to become low by a cost of labor market. So if you're going to fire, a lot of people who are government employees, that in itself is, deflationary, because now if people have less jobs, they are going to spend less. And that's going to be really, groundbreaking, because now after so many years of, massive spending, finally we have some sunshine into, government spending and accountability and, efficiently using the tax dollars. So all in all, it's a good thing. but it is going to be coming at a very huge cost of unemployment, and I'm not sure how they are going to react and how the repositioning is going to happen. So all these roads are leading to inflation, like manufacture everything in USA, the tariffs on China, the immigration policies, all of these things are going to add to the inflation fire. And that is why you see the proof of it on the 10-year yield, which is firing up at 4.4%. So that is one side of the equation. What is the other side of the equation? The other side of equation is Fed is on the path to cut the interest rates. And if the economic data worsens and if the labor market weakens, then it gives the Fed the opportunity to cut the rates. But as of now, the labor demand and the labor market is strong on paper, and that is why Fed is not, in a mood of hurry to cut the interest rates massively. So this is a very delicate balance that the economy has to go through in coming quarters. So that is the macroeconomic events and the factors which can affect the stock markets as well as the US economy. The other two important factors which are related to the geopolitics is the crude oil. You have seen since past 2 months, crude oil has been coming down and crashing like crazy from $65 to $72 range. Now, right now, it is stable at 71 or 70s range, which is a good sign. The reason why I'm concerned with the very low crude prices is it signals that the demand for energy is, decreasing or it's coming down. So what does that mean? That means the economic activity is slowing down. If the economic activity is slowing down, then that means the earnings and the company-wide, businesses are slowing down. So that brings, downward pressure to the equity markets. On the flip side, geopolitically, with the victory of Trump, the chances of de-escalation have gone up like crazy. So I don't think like after Trump is sworn as president, the wars between Russia and Ukraine and the wars between Israel and Hamas are going to last longer. The probability is very, very low of those wars being prolonged or elongated in Trump regime. So that is a good sign. So the de-escalation of war is leading to deflation. So those are deflationary forces which will, come into the economy. So all in all, it's a very delicate balance, in the economy right now. And the more data we get, the more clarity we'll have as to the course or the future of equity markets. So that was it from the macroeconomic side, and I just wanted to inform you the implications of all the major economic developments that are happening in USA and its implications. So that was it for the macroeconomic section, and I'm going to create a new video for the technical charts and exact levels for you guys to know and watch. So I'll catch you guys in the next video. Till then, keep learning, keep growing, and keep trading.